Welcome everyone to today's class in the introduction to banking. Last time we discussed the work of central banks, which central banks there are, and the different functions central banks take over in modern economies, especially regulation, supervision, and looking out for monetary policy. And now we'll turn back again to the business side of banks, and we'll shortly talk a little bit about the different business models and sources of income for banks. We've already seen that it's an important question whether you have a separate banking system or universal banking system, meaning that in some countries banks are allowed to do both commercial and investment banking. In some other countries they are prohibited from doing both. They have to be an investment bank or a commercial bank. And so we'll talk about the two sides of their business here. First about commercial banking, and then a little bit about investment banking. Commercial banking is actually very, I wouldn't say boring, but it's pretty standard. It's taking deposits on the liability side of the balance sheet and giving out loans, lending on the asset side, and that makes up most of the business in a commercial bank. It will get a little bit more interesting, I guess, when we talk about investment banking. I'm in the tricky situation right now where I have to think about what to teach you here. Just like in all areas of finance, should I keep having an interest rate that is non-equal to zero in the model and in our teaching here? Now, usually I would start out by explaining that saving is a natural way of a household to smooth intertemporal consumption, meaning that a household will move some of its earnings, some of its savings to the future so that it can consume more in the future, and it will refrain from consumption today. But this only really works when you have an interest rate. At least then you will get a return. Now, we still need checkings accounts. We'll have some parts and some types of savings account, but I guess with interest rates being at 0%, the money that is kept at a bank will usually be on a checkings account, meaning that you get your income, you pay your taxes, but you don't bring your money to your local bank to get 0.01% interest on your saving. I saw a video from, I think, the 70s in Germany, an extract from television in which banks were criticized for only offering 6.5% interest on a savings account. Now those days are over. 6.5% risk-free, that was a long time ago, but nevertheless, yes, especially for intertemporal consumption and for smoothing intertemporal consumption, people will still save. And this is related to savings, obviously, in economics, and this is one reason why banks will get deposits. If usually they offer some kind of return or some services attached to deposits, yes, households will bring money, deposits to banks, and they will invest in banks and they will finance banks, partly. How much do we save? Well, that depends pretty much on the current level of interest rates. It depends on risk aversion of a household. Some households are more risk averse than others. And it is interesting to look at some empirical facts here, because from these empirical facts from some selected countries, you can also see that it's highly dependent on cultural aspects. Well, saving is important, creates capital, boosts production, that's okay. And another important reason why saving can be good, can also be detrimental, but one argument in favor of saving is it prevents social decline and welfare loss in the future. It's actually the same reason why, at least we here in Germany, think we need an unemployment insurance, and we need health insurance, and we need retirement insurance. Any idea what is the political idea behind that? Why we have social security? Very easy. People, humans, have a tendency to consume more than they actually have. And they don't like to save because they want consumption now. So if you don't have health insurance, if you especially don't have any retirement plan, people will just consume now, and then at old age they will need money. And where does that money come from? At least in the social democracy and the social economy, it can only come from the state. So the state in advance says, well, you can rely on the state's help, on society's help later on, but you have to make some preparations, and you have to pay into social security. That's the social contract we have here in Germany. These are the savings rates of German households between 91 and 2017, and not surprisingly, as you can see, it's a steady decline. And if you were to plot the interest rate level in the same plot, you would also see interest rates have gone down, and so has the savings rates of German households. So that's one explanation for that. Any other explanation? Any other explanation you can think of that explains or might explain savings rates? Yes? Yes, real wages. What else? I have to admit, I don't want to dabble in the economics behind this, because as you can imagine, this is a huge part of economics, and this is an open question, and I guess a question that can never be fully understood. But what is striking here is what? That at least to some extent, the savings rate has gone up, usually after crises. As you can see, the dot-com crisis, or not crisis, but the dot-com bubble, 99, 2000, terrorist attack in 2001, households slightly stepped up savings, went down again after the financial crisis, so that doesn't play into this theory. But since then, in the beginning and after the Euro crisis, households have saved a little bit more. Future expectations will be more important, I guess. Not just real wages, but expectations what real wages will look in the future and economic outcomes. Because if you know that something has just happened, you will make some expectation, you will have some expectation regarding the future, and if your expectations are dire, you will save for problems in the future. If you think, oh no, the economy will step up and we will see a boom economy, then you might stop saving for some time. So this will also play into this, but mainly it's about interest rates. Here are some saving rates of private households in selected countries: France, Switzerland, Germany, UK, Canada, and the US. What is striking? What is striking? There seem to be systematic differences between the savings rates of certain countries. UK and especially Canada and US are quite similar. France is the highest, and Germany is almost 4-5% higher always than UK and US. Why? What could be one explanation for this? Interest rates, yes, but they don't differ too much. Moving along the timeline. In many cases, cultural differences. Savings rates and behavior, saving behavior is also influenced by cultural aspects. And what you can clearly see is what I guess this is true for Canada as well, but what is especially true about the US, about people and households from the US. How do they invest, especially for old age? Compared to German households, they buy stocks. German households, I guess up until now, would have never thought about buying stocks or stock products, stock-linked products, to save for their retirement. We are used to buying life insurance. We are used to getting a pension from our social security. We are used to buying life insurance, traditional German life insurance, that pays out at least 4 or 5% interest over the whole period. And we've never been a country and a society of stock investors. This is totally different when you take a look at the UK and even more with the US. Private households in the US are much less risk averse when it comes to stock investments, even though one has to see that it doesn't need to be riskier, because if you invest long term in the stock market, you will almost always have a higher return on average than any other investment with the same risk. Short term, different story, but long term, it's the safe thing to do. So I guess cultural differences make up a large part of the differences between the savings rates here. So this can be explained. And traditionally, I have to say, we had 3 different types of deposits. We've had demand deposits. Those are available overnight deposits on your current account. You have fixed term deposits, deposits with a fixed duration. Those are called time deposits, or with specific notice deposits. And we have saving deposits, which is money with unlimited duration. And you have a notice period of at least 3 months, and you will be issued a certificate. This is something that is different from the US in comparison to Germany. We have our term deposits, time deposits with our German banks. In the US, however, you can also buy so-called certificates of deposits, CDs. And this is interesting because they are tradable. CDs are tradable, and you can buy, say, a deposit at one bank and you can trade it. And the interest rate that is paid on the certificates of deposits, those are the CD rates, and banks will often advertise the CD rates even in their window pane. And you can see it in the shop window. So CD rates, the interest rate paid on the certificates of deposits, those are saving deposits. Now, why do we have such a variety of deposits? And one has to see that, I guess, in Germany, we will, if we haven't seen it in some banks, we will see a sharp decrease in the variety of deposits that are offered. Why does a bank offer different types of deposits? Imagine a world where the risk-free rate is 5%. Then it's the easiest way to fight for customers via their deposits. People will come to you if they require a loan, that may be once in a lifetime, if it's a mortgage loan. They might come to you as a bank if they are in need of a car loan. That might be every 5 to 10 years. Or they will come to your branch, or they will become a customer in case they need a checking account or they need to invest their money. Now that could happen each month. So an easy point of contact and a point of sale for a bank will usually be via the deposits. And back at the time when the European Central Bank and some other central banks weren't flooding the market with liquidity, banks had to fight for deposits because it was their financing. So they were looking out to get customers, and they were looking to get customer deposits. And one way was to offer, flexibility when it came to their deposit contracts. So you could see a large variety of contracts, different types of interest rates, different periods of notice, and some different interest rates that were sometimes linked to stock indexes and so on. And this gives you more flexibility for the bank in order to get customers, but it also gives you more financing tools. In the end, back in the day when we had interest rates, banks were in need of deposits. Nowadays, I guess they only accept deposits because they want to get they want to contact the customer. They want to cross-sell anything else with a higher interest, but this is why you can see that usually you will get 0% interest on your deposits, and some banks are now starting to demand negative interest rates on deposits higher than, say, 100,000 euros or 500,000 euros. And also, again, under normal circumstances, banks are very interested in long-term deposits because it gives them much better forecasting ability when it comes to long-term liquidity and their financing structure. So they try to offer deposit contracts that, in contrast, for example, to demand deposits, were more long-term in nature. So this is why we usually, in Germany at least, we saw a huge variety of different types of savings accounts. If you are from Germany, you might remember this, that we had things like Wachstumssparen, Indexsparen, DAX-Sparen. All these were different types of traditional German savings accounts, Sparbücher, with the idea that you got a little incentive to keep the money longer on your savings account. Does anyone know how one of these products worked? For example, the DAX-Sparbuch, my favorite example. And I will tell you the background to that product. A side note story, very funny. Back 13 years ago, this type of savings account was marketed by German savings and loan associations. They might still offer it, but I don't think so. The DAX-Sparbuch was a savings account which offered a fixed interest rate of, say, 2%, plus a little bit extra in case the DAX, the German stock exchange index, increased. And maybe if it rose by 1,000 points, you would get an extra, I'm making this up, maybe 0.2%. So instead of just getting 2% interest, you got 2.2% interest on your savings account in case the DAX performed really well. And in case the DAX decreased, you would simply get your 2%. And I can still remember my PhD advisor being on national television, hart aber fair, during the financial crisis. And that's always a tricky, that you don't want to get in that situation. As a researcher, as someone who has actually some knowledge of markets and banking, to sit in a TV show, in a live TV show, and then getting questions from the audience. And one question, financial crisis, was, is my DAX-Sparbuch, is it still safe? And he said, live on television, of course it's safe. Why shouldn't it? It's in a deposit insurance. It's a savings account with a German savings and loan association, so the deposits are insured under various deposit insurance schemes. Right next to him was a journalist who said, no, that's not correct. That's not fully correct. So obviously it's related to the DAX. So as the German stock index was going downhill, obviously the interest rate you would receive on that savings account would be lower, but your deposits would still be safe. So I still remember we talked a lot about this tricky question back in the days, 10 years ago. Okay. So that's something from the past, something banks try to market. And do I have this here? No. I think, yeah. We'll come to that later on. The savings deposits, I think it will decrease in importance pretty much over the next couple of years because banks don't need deposits that much. However, it is still very important, I think, for banks to get a grip on customers. Because if you have a customer with a checkings or savings account with you, you can try to cross-sell, for example, loans or other products. So these are deposits. Again, remember that for the bank, deposits are a source of financing, just like a loan. So it's important on their liability side. Sometimes you also see hybrid securities, external financing. External financing is usually primarily based on deposits. Go back to the first couple of slides where I showed you some characteristics of the German banking sector. There you saw the balance sheet of the Hamburger Sparkasse, the Savings and Loan Association of Hamburg, and you would see that most of its liability side actually consists of deposits, of customer deposits. So, demand deposits, overnight deposits of non-banks, credit balance in the check or business account, that is actually what you have on your checkings account. It will usually not give you any credit, any interest rate, and it's just kept in order to pay your bills. But that's a type of deposit. The purpose is handling cashless payment transactions, also used as a disposition mass. Interest rates would, I guess, now all be at 0%. No one will get more than 0% on its checking, on his or her checkings account. Quite clear, that's the price of permanent availability. If you put it on your checkings account, you can withdraw it at any time. So don't expect to get an interest rate. Fixed term deposits. We used to have these as well, and I guess you can find some of them nowadays, but this would mean that, for example, you would invest, say, 5,000 euros for at least 2, 3, 4, 5 years, and you would get 0.5% interest or maybe 1% interest rate. That's very meager return on your investment, and you can probably do much better than this. Again, 10, 15 years ago, this was quite common. So you would get 4 or 5% on your savings account, and you could get 7, 8% for, say, 5%, 5-year investment, risk-free. And this has led to some infamous or famous sayings. Perhaps some of you will remember the former president and former managers, general managers quote from Bayern Munich. We have a fully loaded Festgeldkonto. Das berühmt-berüchtigte Festgeldkonto von Bayern München, aus dem dann die Spieler bezahlt werden. Das ist Festgeld. Also fixed term deposits, the German word is Festgeld. It means it's invested for a fixed term, and even this will only get you probably maybe 1.1% interest. Interest rates depend on current market interest rate. That's the reason, the duration, and the amount of the deposit. These are the interest rates on the effective interest rates for deposits of private households with agreed duration up to 2 years and over 2 years. As you can see, this is data from 2014, 2015. It goes down and down and down and down, probably even lower, and below is 1% right now for investments over 2 years. And you can get this from the Zinsstatistik of Deutsche Bundesbank. So let's skip that. It's zero interest policy. Okay. Money market papers. Those are the ones that can be traded on an exchange. Those are the certificates of deposits, the CDs, or money market paper. They are marketable receipts for deposits. Those are fixed term deposits that are made tradable for institutional and retail investors. Standardized duration and standardized volume, otherwise you would not be able to trade them. And you have either fixed return or variable rate CDs. Those are called floaters or floating rate CDs. Duration is up to 1 year. This is why they're called money markets. Remember the distinction. Anything, any investment that has a duration less than 1 year is money. Over 1 year, it's capital. Kapitalmarkt, Finanzmarkt, Geldmarkt ist der Oberbegriff. Geldmarkt, alles bis zu 1 Jahr. Kapitalmarkt über 1 Jahr. So it's a money market instrument and a money market paper. And this is taken from Reliance Bank, locally owned and locally managed. I think it's St. Louis. It's in St. Louis. It's an US bank. And you can see they aggressively advertise their CD rates. And for example, you will get 0.6% annual percentage yield for 11 months and up to 2% for 84 months. So this is how they advertise their CDs. I think I haven't included this in the revised set of slides. I wanted to do this. When I went to the US for a conference this year, again, as is tradition, and you might be more. This might be better known to you because you're from a different generation. I'm still used to the idea that German banks have branches, and people go to a branch to get their account statements, to do transfers, etc. And it was a very traditional, very conservative business. Now you can see that banks, because they have to rethink their whole branch system and their branch network, they have different ideas. Mobile branches operating out of a car, branches that are very small, pop-up branches, pop-up stores like this. And when you go to the US and some other countries, you will see, for example, minuscule, very small branches, say, inside of a Walmart. And for me, this still feels very strange because usually, or we didn't used to have bank branches in supermarkets. You had large bank branches and supermarkets, and banks would have never come up with the idea to team up with a supermarket to attract customers and to speak to customers. Customers came to the bank. They didn't need to fight for customers that hard. So this has changed completely. And this is important for another reason. The US banking system, I told you that you have a huge number of banks in the US, and also this one here, these banks are relatively small compared to German banks. You have some large banks, obviously Bank of America, Citigroup, etc. Those are huge on a global scale. But many US banks are actually very, very, very small. They might have one headquarter, 30 people working for the bank, and maybe 2 or 3 branches operating out of the local Walmarts. And this is completely different compared to Germany, where you have an average size. The average size of the bank is usually larger in some other countries. Savings deposits, classical money investment for private customers. We used to have Sparbücher, savings books. Those are more and more replaced by savings cards, Sparkarten, and the withdrawal of money is possible at ATMs with those savings cards. Up until 1993, the term Spareinlage in German was legally protected. So you could not simply use this term if you didn't fulfill certain requirements. And we have this here. It's not regulated in the German Banking Act, but in the legal order or the executive order concerning the accounting of banks, die Verordnung über die Rechnungslegung der Kreditinstitute. It says in paragraph 21 that savings deposits are open-ended funds that fulfill the following conditions. They are marked as a savings deposit by drawing up a certificate or a savings book. This is different from a checkings account. For example, if you lose your Maestro card, no one cares. You will just get a replacement card on your checkings account. If you lose your savings book, yeah, the Sparbuch, the bank and you have to undergo a lot of things to reclaim that. What is actually done is there is a public announcement in the bank that says that, for example, the same also happens in case your grandma or your grandfather dies and you cannot find the savings book. Yeah? In that case, a public statement, a public announcement is done within the office of the Savings and Loan Association, saying that anyone who has found the official document or who owns it has, let's say, 1 year time to reclaim it, and after that period has passed, then it will go to this or that person. And this happens all the time. And to be honest, I still have a savings book, I think with €1 on it, from my studies at the Sparkasse Passau. So I'm still a €1 investor in the Savings and Loan Association in my university. I think I still have the savings book. My plan is when I retire to check in and cash in. I guess I will get €10 back then. Okay, they're not intended for payment transactions. You cannot pay with it, and you cannot make any money transfer from it. They have a notice period of at least 3 months. They are not intended for limited companies, corporations, cooperatives, economic associations, wirtschaftliche Vereine, partnerships, but we have exceptions for charitable, benevolent, ecclesiastical purposes. What are those? Churches and charitable associations. In German, gemeinnütziger Verein. Gemeinnützige eingetragene Vereine, die dürfen tatsächlich ein Sparbuch aufmachen. Und Kirchen dürfen auch, oder kirchliche Verbände und kirchliche Einrichtungen dürfen auch ein Sparbuch öffnen. Aber ein Unternehmen, eine Aktiengesellschaft darf kein Sparbuch haben. Die müssen was anderes machen. Yes, and this is here the thing I talked about. Wachstumssparen, Prämiensparen, Zielsparen, Extrasparen, Bonussparen. Those are all different types of savings accounts that were at some time marketed in Germany by German banks. Okay. Payment transactions. We have cash, we have book money, we have monetary surrogates or money substitutes, and payment transactions are obviously also one type of service banks offer. The banks bear the risk of not being able to fulfill all payment wishes. And I guess 5 to, I would say maybe 10 years ago, payment transactions were the least important service offered by banks. No one cared about payment transactions. It has to be done, it's important, and it has to work. It has to work properly from a technical point of view. Nowadays, I think this is the current hot topic when it comes to banking. Payment is done via PayPal, Apple Pay, WeChat Pay, and some other service providers in China. It's done by, I already have PayPal, you have cryptocurrencies and these sort of things. So banks will have to start charging fees again for accounts and for transfers. I always tell this because people do not realize that we once had this before. Back in the days, I still remember that my parents, my father was a lawyer, and he operated his office. And back in the 80s, banks charged a fee for every transfer you made. So, for example, you would pay 20 Pfennig, 0.2 Deutschmark, for any money transfer going out of your account. Now, this only applied to bank accounts that were not in one of your in the one pillar you were in. For example, if you had an account with a German cooperative bank, transfers to other cooperative banks were free of charge. But transfers from, say, a savings and loan association to a cooperative, or from Deutsche Bank to Commerzbank, or Commerzbank to, again, a cooperative bank, they would cost you, say, 10 or 20 Pfennig. Now, with digitalization, with computers and so on, those fees dropped. And nowadays, we don't, or let's say up until maybe 5 years ago, we were in a very comfortable situation in Germany where banks didn't charge almost anything for a checkings account. You would see offers by online banks telling you, come to us, open your checkings account with us. It is free of charge, no fee at all. Just bring us your money and you will get 50 euros extra. You will get a 50 euro bonus if you sign up with us. Even then, managers and officials at Deutsche Bundesbank argued, and at BaFin argued, that this is ridiculous, that banks are offering services, but because of the tough competition, and just like with newspapers, the answer of the banking sector was, okay, we have decreases in costs, but we are relaying that full to customers, reducing the revenues from accounts to almost zero. Nowadays, as you can see, that zero interest rate policy has a big influence on bank profits. Banks suddenly realize they have costs. They have IT systems, they have online mobile banking, and this costs a lot, and people are not paying for that. So they're stepping up the commissions and the fees you have to pay for your account. Now, when you go to other countries, people will always say, well, obviously you have to pay for your bank account. It costs you money. That's also one reason why PayPal and other service providers are so attractive and have already been so attractive in the past in these countries, because bank accounts were not for free. But now banks have to increase fees again, and this is where they're again challenged by, say, PayPal and Apple Pay and so on, because they are offering these transactions for free in exchange for the data. And then they will try to cross-sell anything to you via data mining and exploiting the information in your payment data. So this is quite interesting. And back at the day, to come back to my example, for example, my parents had two bank accounts, one with a savings and loan association, with a Sparkasse, and one with a cooperative bank. Why? Because my father received a lot of transfers from his clients, and he wanted to offer them the possibility to choose from one of those two banks so that they would not have to pay an extra fee because they had the wrong bank. This is why, if you take a look at the official bills from, say, contractors or large companies, they will, in the bottom, that's a legal requirement, they will tell who's responsible, who are the managers, the legal entity, but they will also include information on their bank account. And this is one of the reasons why most contractors and why many business companies still have more than one bank account. And large companies will keep one with a large savings and loan association, one with a large cooperative bank, and one usually with Deutsche Bank or Commerzbank or Postbank, because then they have all those three large pillars of the German banking sector covered. One reason for that. Nowadays, we would think, why would you keep three bank accounts? You only need one. That's correct. But for these reasons, historic reasons, people still have more than one bank account. Means of payment, cash, book money, e-money, money surrogates. It's important to note that I told you that e-money used to be a little bit different. E-money used to be the information stored on a chip card with which you could pay, and if you were to lose the chip card, it would be just like losing a wallet. So I guess by nowadays standards and by modern standards, we would consider the E-Geldkarte, the E-Geldkarte, to be a precursor of modern wallets, of electronic wallets. And with Bitcoin and blockchain technology. Does everyone know how blockchain works? If not, look it up. it's too complicated to explain it in just one minute, and I guess it's too important. The main important takeaway from blockchain is that it's a ledger that keeps track of transactions, and it's massively transparent. And the idea is to have a ledger of transactions anyone can view and anyone can check, and it should be as transparent as possible, so you will not have any transaction people will not agree upon. So die Idee der Blockchain ist ja im Grunde genommen, dass es einfach ein riesiges Transaktionsbuch ist, wo alle Transaktionen aufgelistet werden und das in der Form transparent und stabil ist, dass Sie da keine Manipulation vornehmen können. Also alles, wo Sie irgendwelche Transaktionen haben, Strom, Wertpapiere, Geld, bezahlen, was auch immer, Verträge generell, können Sie sich vorstellen, dass Sie da mit Blockchain-Technologie das auf eine Art sicher hinbekommen, dass es verteilt, absolut manipulationssicher dann ablaufen kann. Was natürlich bedeuten kann, dass bestimmte Transaktionen, bestimmte Markthandlungen demnächst dann einfach nicht mehr zentral irgendwo ablaufen, sondern dezentral über eine Blockchain. Und das wird hier natürlich auch nochmal ein Riesenthema, oder ist schon ein Thema, aber wird sicherlich dann noch viel interessanter. The differences between those means of payment are quite clear. Cash can be lost, it can be stolen, but and it also brings zero interest. Book money is a claim against credit institutions with the right to cash in at any time. That's nice. Has a risk of a bank run. Payment transactions should be fast, secure, and inexpensive. I'm only including this here because I think 10 years ago, no one cared about this. We all thought that we can always have inexpensive, cheap, secure, and fast transfers. Well, secure, that's a question when you do it online. It might not be as secure as you think. It will be fast, but it will not be cost-free. The bank will have to pay for it. The question simply is whether the bank will charge a fee or whether banks will keep it cost-free for you as the customer. You have direct transactions, you have payment processing companies and banks. You will have big tech companies like Apple and Google moving in here. And there is a lot going on in this area. You can also use direct transactions. Direct transactions are actually the preferred way of handling cash if you are in an illegal business. It's a preferred option of transferring money for illegal purposes, tax evasion, drug trafficking on the black market, because you're taking money and you transfer it directly. You put it into a bag and you give it to someone. This is then money laundering. Is everyone clear what money laundering means? Geldwäsche. Weiß das jemand nicht? Gut. In Germany, since 1993, ridiculously late in fact, since 1993 we've had the Money Laundering Act, Geldwäschegesetz, which means that cash payments and disbursements over 15,000 euros, they have to be checked by the bank for criminal activities. And if they have any indication that the money might have arisen from illegal sources or is intended for illegal purposes, they will have to notify the authorities. This is done in the background. For example, if you take out a lot of cash from your savings account and you transfer it to your local car dealer to buy a car, then I guess you will not get any notice. Otherwise, 15,000 euro is the threshold for the Money Laundering Act to become relevant. Payment processing companies, I will skip that, but I will explain to you something else. You might have wondered why in the German banking sector, in the three pillars, we have in the cooperative sector and the savings and loan sector, we have small banks and one large head institute for each pillar. We have the DZ Bank for the cooperative banks, and we have the association, the German Savings and Loan Association, Deutscher Spar- und Giroverband, and in the Savings and Loan Association pillar, we have Landesbanken and also head institutes. Does anyone know why traditionally we've had these head institutes for each pillar and why we've had Landesbanken? Because before modern technology entered the banking sector, we needed to net and to clear payments between banks. How would you transfer, how would you process all those transactions going from our bank to the bank next door? First thing we could do is we transfer from A to B and B transfers from B to A. Not very sensible because we are transferring a lot of money. The first thing we could have done is to net our positions. Maybe we have to pay 5 million to the other bank has to pay us 4 million, so we net our positions, and we only have to pay 1 million and we're done. It's safer, it's cheaper, it's faster. We have to double check all transactions. And then we have to make sure that each transaction is routed to the correct addressee. And this clearing of transactions, this was very, very important and very difficult back when we didn't have computers. So decades and even centuries ago, we had what we call large Girozentralen, large centers for clearing and for processing payments. Those were the Girozentralen, in which those book money transfers were netted, were checked, were cleared, and then processed. And this is why, for example, each sector has had its own head institute, because those were the, in other words, central banks within this pillar. They had to clear and check and process all those payment transactions. Deswegen hatten wir Landesbanken auch unter anderem, Girozentralen, und die haben dann die Zahlungen in den jeweiligen Säulen, also im Sparkassensektor, im Volksbankensektor, haben die Zahlungen dann zusammengefasst und verarbeitet. Und das war damals, ohne Computer, war das natürlich alles noch auch teilweise händische Arbeit, und das war dann nötig. Gut. Banks, well, it's shown here. As you can see, it actually started in the 17th century, the first cashless transfer within the own bank. So even in 16 and something, we've had a bank that started out transferring money from one account to another. So this is the initial start of the gyro transfer we know today. It's a payment transfer from one bank account to another bank account, instigated by the payer, not the payee. So we send money from one account to another account. And it started in Germany with the installation of the Reichsbank in 1876. Was an installation of a gyronet of supra-regional transfers. And then Postcheckverkehr, postal check transfer system, was installed in 1909. And then it went on. Nowadays, we have in the background the Gyro network of the Deutsche Bundesbank, das Gironetz der Deutschen Bundesbank. Heißt was? In short, large, big banks operate their own gyro network, and in other cases, it has to go via Deutsche Bundesbank. So transfers are relayed via Deutsche Bundesbank, and this is something you do not see as a client, as a customer, but which is done in the background of money transfer. So if customers of payers and recipients do not belong to the same gyro network, payments must be processed via the Bundesbank network. Okay. Payment transactions technology, well, as you can imagine, it started out with simple paper cards, moved on to early computers, modern computers, magnetic stripe servers, online, and so on. This is interesting to see if you want to see the increase in the innovation of the banking sector and in digitalization, you should have a look at the latest research paper I've put out. What I've done with a colleague is to look at all the patents by US banks. And US banks have by now filed for almost 4,000 patents compared to virtually no patents before 1998. So no patents throughout the history of the US up until 1998, 4,000 patents since then. And they patent usually, and they file for a patent on mostly processes, technologies related to payment transactions, internal processes, IT. And this is a huge development, and this is where you can see digitalization taking place in banking quite vividly. We've seen a harmonization, and again, you're young, you're not old enough to know what life was back 15 years ago. I can still remember when I made my exchange semester in Japan, I had three choices. Use Deutsche Bank or Citibank, which at that time, nowadays it's Targobank, but they operated back then as Citibank, and go to Deutsche Bank or Citibank. Second option, open a Japanese account. Now that's fun if you don't really know how to speak Japanese. Open a bank account, that's the best thing. Third option was to use your local German bank account and pay 40 euros per transfer fee at that time. Also makes sense. So what I did is I opened an account with Citibank, and I had one bank branch in Kyoto, and I always went to the Citibank central branch in Kyoto, and then I withdrew money from my German bank account. Back at that time, that didn't cost a fee. So it was very cheap to take money from my German savings and loan bank account, transfer it to my German Citibank account, and then withdraw money. Nowadays, and by the way, it was not virtually, actually this is quite, this is very recent. I had to wire money to a colleague from India. I went to my savings and loan association, to my Sparkasse, and as you can imagine, they don't have too many customers trying to wire money to India. It took them almost an hour to fill in the form, and because the form didn't have any spaces, India has a different system when it comes to accounts. You need to, I'm not so sure how it works in the US and Canada. In the European Union, we now have SEPA. We have the single euro payments area, meaning that every bank account in the European Union has a unique bank account number that identifies the country, the bank, and the account. Now with India, apparently, you have to specify the bank and the branch and then the bank account number. And the sheet from my German bank wasn't meant to keep that information, and they had to make a workaround to wire the money. Frustrating experience. So this is what we have now. We have SEPA. Wasn't the best of inventions, as you might know. No one can remember the SEPA number, the IBAN, but that's a different story. Special features of cross-border payment transactions. They will have to be in different currencies. You will have currency conversion, and governments strive for uniform payment transactions. Multinational banks have a great self-interest in standardized similar procedures. I've given you this example of Citibank. Now that is obviously quite convenient. It also comes in with some other disadvantages, but that's it. Traditional banks, they offer deposits and credit loans, credit transactions. They are in direct competition to providers who use invested money on the asset side. Nowadays, traditional banks need to increase fees, will lead to a migration of customers. They will have to compete with Google, Apple, and so on. What's the name of that Chinese company? I'm always thinking of WeChat. But WeChat Pay isn't that large. What's the name? What's the eBay clone in China? Alibaba, Alipay, that's one. Alipay is much, at least for example in Japan, Alipay is way more available, readily available than WeChat Pay. Some other methods of payment: loyalty card, credit cards, debit card, money cards. I guess cryptocurrencies and electronic wallets should be added here, and that's payment transactions for you. And some effects of using cards: reduced expenditures, banks lose information. This is, I guess, very, very important. And I think banks didn't really realize on what kind of a data treasure they were sitting on all the time. Obviously, bank managers and loan officers, so the people working at a bank that have to evaluate a loan application, we call them loan officers. Loan officers have always taken a look at the account and the information on the transfers on a bank account to make some judgment on whether you should be given a loan or not. However, I think apart from that, the information on the transfer and the payments on your checkings account were never really fully used in the context of data mining and data analysis. This is what tech companies have come up with. They have realized that by analyzing the transfer and the payment transactions of customers, you get a lot of information on what you're doing with your money. And then you can be targeted for advertising and you can be offered special services. For me, it is very interesting to see that, I mean, it's great that we have fintechs. However, at least in Germany, I'm under the impression that the fintechs that are now popping up out of the ground, in Germany at least, that have new innovative ideas for financial technology, blah, 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 what they usually offer is some kind of wallet, some kind of app. The app combines 2 or 3 accounts or 2 or 3 profiles, and the result is that you're signing up all the information rights and data rights to your payment transactions to the fintech, and the fintech then tries to market some insurance contract or some other financial investment to you because they know which kind of customer you are. Now, I don't think that's very innovative. I mean, the first couple of wallets were innovative. Yes, they had this idea that you could use customer data to specifically design your advertising. However, I am not interested in installing the 50th app on my smartphone to keep all my 2 bank accounts and my 3 insurance contracts in 5 different wallets. So we will see a lot of consolidation in this fintech sector in the next couple of years because I think a lot of them will go bankrupt. Very few have compelling selling arguments for a true innovation. Most of them are just trying to come up with yet another app. I've seen a recent one. This is now trying to lure customers into their app by arguing that all the investments the company does go into sustainable and climate and carbon neutral projects. So it's the same idea again, but this fintech now tries to claims to be carbon neutral and eco-friendly. Same thing in green just. I've talked about the PSD2. It's effective, has become effective January 2018. The goal is to increase competition between banks and non-banks and to strengthen data security in online payment transactions. Does anyone know what came with the PSD2 and which is now standard, which might give you a hard time, or has already given you a hard time if you're an online or mobile banking customer? Anything you might have realized by now? And actually, this is something US banks have also been very concerned about, and a lot of innovation has come from that problem. Keine Idee? Welches Stichwort? Sie nutzen doch bestimmt alle Online-Banking, oder? Wie identifizieren Sie sich denn da mittlerweile? Two-way authentication. If you're a bank in Germany, or generally in the European Union, data security for online and mobile banking have been stepped up as part of this initiative. And you now have two-factor authorization and authentication. What does it mean? It means, for example, that if I go to my online banking account, I have to insert a password to access my account. And if I want to transfer money, I need a separate second app to generate a transaction code for the transaction. And this is where banks are actually very innovative, and they are trying to come up with more convenient ways to authenticate customers and transactions using fingerprints, eye scans, and so on. And this is two-factor authentication. This is also part of PSD2. But what is more important is that by strengthening data security, one initiative and one part of the PSD2 was to make sure that customers have full rights to their data. And if you as a customer sign on the rights of your data to another company, then the bank who has your data needs to comply, and it needs to transfer the data to the other company, and it has to have technical and IT interfaces in place that you cannot simply say, oh, sorry, we don't have the IT for that. We would very much like to transfer the data, but we don't have the right IT system. That's no longer an excuse. So this is a huge change to banking in the European Union, the PSD2. And the idea obviously is what? To strengthen fintechs, to strengthen competition and financial innovation in financial technology in the banking sector. Okay, it's deposit taking. That's very, very, it used to be very boring, let's admit it. You know? I mean, it was a very stable source of financing for banks, and I guess deposits will decrease in importance, but what will become more and more important is payment transactions, data on payment transactions, and the fees banks can charge on their accounts. Any questions concerning deposit taking? No questions. So let's move on to credit business, lending. What is a credit agreement? And now we have to get legal. And I have to give you a disclaimer. The next couple of slides will include a very awkward English. Why? Because this is legal techno-babble taken from German, translated into English, with some words probably being very bad translations. We'll start again with the German Civil Code. I'll say this again because we have some. I just discovered, I think, a bug in my peppermint. See, okay. We have some exchange students here. Remember, German does not have case law. It's not a case law system, but it has a civil code. That's the German civil code, or bürgerliches Gesetzbuch. That means that most of contract law and civil law is included in this civil code. And the German civil code has two types of loans. The first one is Geldleihe. The second one is Kreditleihe. What does it mean? The first one translates into money lending. In this case, the lender provides the borrower with an amount of money, while the borrower is obliged to repay the amount of money plus interest at agreed times. So you give money to someone else. The second type, Kreditleihe or credit lending, is a promise that the lender gives to the borrower to settle its debts in case the borrower cannot meet it. The difference is, for example, if I'm a bank and if I do money lending or Geldleihe Geschäft, I give 5,000 euros to you. Yes. If I do the second type of contract, I simply promise to pay your debts in the amount of 5,000 euros in case you're bankrupt, in case you file for insolvency. That's the difference. The first one, 5,000 euros are transferred. In the second one, I'm actually extending credit to you. I'm not giving you a loan, I'm giving you credit. So that's the difference between Geldleihe and Kreditleihe under German law. Now, in order to obtain a loan, whether it's credit or it's a loan, a customer first submits an informal application and the bank then checks its ability to enter a contract as well as the credit worthiness. This is also a strange translation. I don't know how to put it into English in a better way. Das ist natürlich die Geschäftsfähigkeit. Sind Sie geschäftsfähig? What does it mean? If you are 6 years old and you walk to a bank and you ask for a loan, you might be creditworthy if you are the heir to a large fortune, but you are not legally able to sign a contract. Under German law, there is a certain age under which you cannot legally enter a legal contract. There are some exemptions. For example, if your parents give you an allowance, you're allowed to spend your allowance on chocolate. So certain types of contracts, for example, small amounts of money that you usually would buy as a child on your allowance, that's okay. You are allowed to enter a contract that is only legally positive. So if, for example, someone gives you a gift of 5,000 euros, that's okay. Ein Schenkungsvertrag können Sie natürlich eintreten. Ne? Also der ist gültig, auch wenn Sie 6 Jahre alt sind. Sie können Minderjährigen können Sie Geld schenken. But you cannot get a loan. So that's first thing you need to check. Usually we would think that you are able to legally enter a contract, then it's all about credit worthiness, your credit score. So if the customer confirms that he wants to make use of the credit, a contract is signed, and in a credit application form, the later elements of the contract are laid out. In the contract usually will include the personal data of the customer, the credit amount, term, interest, amount and dates, ancillary costs, processing and management fees, modalities of provision and repayment, loan collateral, termination options, and other conditions not specified in the general terms of contract, in allgemeinen Geschäftsbedingungen, in den AGBs, wie wir in Deutschland kennen. Question. What are ancillary costs? Nebenkosten. Think about it while I check my. Any ideas what types of auxiliary or ancillary costs these are? Yes, it's a bug. What are processing and management fees? it used to be like this under German law. Banks would charge you what they call Bereitstellungsgebühr, a fee for making the loan ready and accessible to you. Fun fact, we used to pay for this for decades until someone said, why are you charging me to give me a loan? I'm already paying interest. And why are you charging me an upfront fee for making the loan ready and available to me? That's somewhat ridiculous. It went to Germany's highest court, Bundesgerichtshof, and they ruled that, yes, it's illegal. And what followed is, because the statute of limitations, for some reason, hadn't expired on all those contracts, each and every borrower in a German mortgage loan was suddenly able to reclaim this type of fee. And I can still remember that I did this for my parents, actually. I wrote a letter to my bank, and you could find legal text on the internet, standard text in the standard forms, saying that, dear Bank X, according to the ruling of the German highest court, blah, 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 these types of fees are illegal. The statute of limitations has not expired. I'm reclaiming my 500 euros. They sent me a standard answer saying that we are not accepting any how do you say that? Any responsibility, and we are not claiming that you're right, but in favor of our long-term customer relationship, we are still offering to pay you back the 500 euros. And if you agree to this, you will accept the 500 euros and never speak of this again. So this used to be more frequent a couple of years ago. Processing management fees, and it might be that you still have these fees when it comes to business loans, but they've become quite unpopular with customer loans. Yeah, so this will be in the loan contract. Again, the ability to enter a contract starts at age 18. There are some exceptions for that. If you are mentally ill, you will also not be able to legally enter a contract, and then you might have learned in your legal class, in your law class, that it can become a tricky situation if the other contract partner is not able to see that you're mentally incompetent. Das unerkannte geisteskrank. Wenn jemand unerkannt geisteskrank ist, ist ja die schwierige Frage, was ist mit dem Vertrag? Ne? Wenn die andere Seite das mal nicht erkennen kann, dass der andere geisteskrank ist und nicht geschäftsfähig, was machen sie dann? Wie wird das rückabgewickelt? Gut. Companies and corporations are legally and contractually capable if they are managed as a partnership or a legal entity under private or public law. So, OHG, KG, GmbH, Aktiengesellschaft, all those legal entities can also enter a loan contract. Credit agreements can be terminated by repayment, end of maturity, or termination, and the borrower may terminate loans with no fixed maturity or alternative termination terms without notice at any time. Do you know how this works in a mortgage loan? If it's a fixed mortgage loan, say for 10 years, and you want to repay early, what happens? The bank will tell you, well, that's okay, you can pay us, but you have to pay all interest payments anyway. So you can repay the loan early on, but you still have to repay all the interests that are due on your mortgage loan up until maturity. If you have a special clause that you can make a special repayment, that's different. Kennen Sie vielleicht im Deutschen? Sondertilgung geht. Wenn Sie ansonsten frühzeitig tilgen, müssen Sie, wie nennen Sie dich noch so schön, die Vorfälligkeitszinsen zahlen. Und die Vorfälligkeitszinsen sind genau die Zinsen kumuliert, die Sie auch über die gesamte Laufzeit hätten zahlen müssen. Also Sie haben dann keinen Vorteil dadurch. For loans with an agreed term, the regular right of termination of the borrower is regulated in the Civil Code, and for both parties, the general terms of business and the Civil Code provide for an extraordinary right of termination. For example, if the borrower has made false statements or his financial situation or credit security has deteriorated, then the bank has an extraordinary right of terminating the contract, ein Sonderkündigungsrecht. Wenn sie natürlich falsche Angaben gemacht haben, ist das Gleiche. Okay, and we also have repayment fees. Then, what is important? And when it comes to banking, let's be honest, for most banks, it's about business loans. It's business lending, corporate lending. Why? Because those make up the bulk of their lending business, and business is big and also much riskier. In retail banking, you will usually do automated credit risk scoring. For example, if I were Targobank, if I were Banco Santander, and you were a room full of customers, I would simply charge you a little extra. I will use automated credit risk scores and then calculate my expected loss and make sure that I earn enough interest rates to cover those expected losses. It's tricky from a technical point of view, but you don't need the kind of expertise you need, for example, in corporate lending. And I can still remember a conversation I had with the chief executive of a large private bank concerning risk management. And this bank is heavy invested in business loans and in loans to small and medium-sized enterprises. And he said, well, we do have all those mathematical risk management models in place, but we are only using it for regulatory purposes. We only use them because regulators force us to do so. If I want to know what the risk is in my portfolio, I talk to my key account managers. I talk to my loan officers, and my loan officers sometimes have 30, 40 years experience in this sector. They know everything what is happening in the sector. And if they feel something's off, then we have a problem. If they tell me everything is fine, then everything is fine. So corporate lending, giving out business loans to small and large companies, that is much riskier and requires more expertise. Why is that? You have to start out with collateral. In the case of retail banking, in loans to customers, usually you have only two types of collateral. Which types? Which types of collateral can you offer to a bank? Any idea? You don't have both at this point of time, I guess. But imagine 10 years from now, what do you have? You have a salary you can pledge as collateral, and hopefully you have real estate. You have a loan, mortgage loan, and the collateral that is used in a mortgage loan contract is the real estate itself. So you have to pledge the real estate, the flat, the apartment, the house as collateral. So klar, was haben Sie denn was können Sie verpfänden? Ihr Einkommen, Ihr monatliches Einkommen, das wird gefändet, und natürlich die Immobilie, wenn Sie einen Immobilienkredit abschließen. In business lending, in corporate lending, it's more complicated. You can use personal collateral and physical collateral. You can use a guarantee or a surety, a guarantee, a co-assumption of debt, a letter of comfort, a letter of credit, and as physical collateral, you can use an assignment for security, a transfer for security, a right of lien, and right over real property. Now, the German words could be, should be, might be more familiar to you. The English translations are not optimal because they are from a completely different legal system. Guarantee, surety, is what we call in German a Bürgschaft. Means a third party commits to pay debts of the debtor if necessary. You might know this from signing the contract for your first flat here in Leipzig. It might be that the landlord required a Bürgschaft from your parents, so that you don't have income, so that if you cannot pay the rent, that your parents will have to step in. Then it's a Bürgschaft. That's a surety, it's a guarantee. We distinguish between regular surety or a directly enforceable guarantee. Gewöhnliche Bürgschaft und selbstschuldnerische Bürgschaft. Meaning that in the first scenario, the guarantor only has to pay if the creditor has unsuccessfully sought foreclosure of the principal debtor's asset. Sie dürfen erst dann auf den Bürgen zugreifen, wenn bereits in das Vermögen des Bürgschaftsnehmers gefändet worden ist. Das heißt, am Ende muss also der Gläubiger warten, bis das Insolvenzverfahren eröffnet worden ist. The second version, the directly enforceable guarantee, die selbstschuldnerische Bürgschaft, means that if the creditor cannot pay, then the guarantor has to immediately step in. He can be asked to pay up immediately by the lender. Also dann kann sofort auch der Bürger in Anspruch genommen werden. Da muss nicht erst abgewartet werden, dass in das Vermögen des Schuldners gefändet worden ist. Ist natürlich, I can say this in English again, the second version is obviously nicer for the investor, for the bank, because it can directly take the money from the guarantor. It doesn't have to wait for the insolvency or bankruptcy filing of the creditor. In the case of a guarantee, also eine Garantie im Vergleich zur Bürgschaft, the guarantor commits himself to guarantee a certain success, for example, repayment and interest calculation of the loan amount. Difference is the guarantee is not regulated by law in contrast to the surety or Bürgschaft. So that's a difference. Personal securities. Schuldmitübernahme, Patronatserklärung, letter of comfort, co-assumption of debts. Those are different legal construction where a person takes over a debt for someone else. So it does not expire upon repayment of the underlying loan and may also be used as collateral for further liabilities of the borrower. What advantage does these personal collaterals have? By the way, I have to remember that that's a false translation of collateral. Sicherheiten sind natürlich nicht securities, it's collaterals. The advantage is you don't have, if it happens all the time that you're taking over the debt and you're extending credit to someone, you don't have to do the same contract again and again and again. You only have one contract in place, and it means that you're standing ready to take over any debts from the creditor. And in the case of the Schuldmitübernahme, it means that a third party agrees to be liable in addition to the debtor for the same liability. And in the letter of comfort, it's in a holding company structure. The parent company of a group agrees to always provide financial support for its subsidiaries so that it can always fulfill its credit obligations. So that's only relevant in a company group. Then we have the assignment of security, die Sicherungsabtretung. This is the case where a claim or another right of the creditor is transferred to a third party as collateral. And one can then distinguish between the assignment of claims for security and the assignment of rights for security. For banks, assignments of claims for security are especially important, also Ansprüche, nicht auf Rechte, sondern auf Ansprüche. And these are concluded between the creditor of the receivable to be assigned. The creditor is also the borrower, and the bank with the cessionary, der Cessionar, whereby a distinction is made between silent assignment and open. Die offene Sicherungsabtretung und Forderungsabtretung und die, ich meine, wir haben es auf der nächsten Folie, die verdeckte Sicherungsabtretung, which simply means that you either notify the creditor or you don't. In some cases, it's relevant to notify the creditor because he or she needs to know where to transfer the money to. In some other cases, it's just a bank account and the creditor doesn't need to know. We've now reached almost the end of the lecture. You can read through this. The difference between the overall or a blanket assignment, die Mantel- und Globalzession, is what? The first one is where you sign over rights and claims, and you have an exhaustive list of claims. For example, the difference, I can exemplify it in the following example. The first thing would be to say, I'm selling, I'm writing off, but I'm assigning the rights, the claims to the credits I've given to you, 1, 2, 3, 4, 5. I have a list of the 5 loans. I will transfer the list, and then they are signed off to the lender. The second case is the one where I would say every claim against people starting with letters A to B will be transferred and will be assigned. The difference, legally the difference is, in the second scenario, I have no idea how many claims this might be. Every claim against a person with the surname starting with A and B. Could be 5, could be 10. So, the difference is that let's talk about this here, in the overall assignment, in der Mantelzession, the claims are transferred at the time the list of the loans is given to the other side. In the second case of a blanket assignment, the claims are assigned at the point of time at which the loans have come into existence. So if I give out a new loan, if I have a claim against a person with a surname starting with A, it is immediately signed over to the other party. Ich sage das nochmal kurz auf Deutsch. Der Unterschied zwischen Mantel- und Globalzession ist eben, dass Sie bei der Mantelzession die Forderungen abtreten in dem Moment, in dem Sie die Liste der Forderungen übergeben. Ja, dann müssen die existieren schon. Bei der Globalzession sagen Sie einfach, ich trete generell alle Forderungen ab gegenüber Schuldnern, die mit den Anfangsbuchstaben A und B anfangen. Dann ist die Forderung aber schon rechtlich in dem Moment abgetreten, in dem der Kredit vergeben wurde. Weil der Kredit wird ja dann vergeben an zum Beispiel jemand mit dem Nachnamen A, irgendwas, und dann wird der Kredit vergeben und ist sofort in dem Moment abgetreten. Das ist der Unterschied zwischen Global- und Mantelzession. Das haben Sie mal so, mal so. Okay, so let's stop here. Do you have any questions concerning these first types of personal collaterals and physical collaterals? If you have no questions, thank you very much and see you next week. Thank you.